Yes, people. So in this video, we're going to take a look at the inflation rate, which is hitting the UK right now, and why the UK might be the highest country with the highest inflation rate in the G7 in this year, according to OECD. So, international body warns British rate of inflation is going to be higher than that of the US, despite effects of Trump's tariffs. So let's take a look at what's going to be happening in the UK this year. So the UK is set to suffer the highest inflation among G7 nations this year. The Organization for Economic Cooperation and Development has warned, amid resurgent in food prices, with some retailers blaming the UK government's £25 billion a year increase in employee national insurance contributions for pushing up costs. The OECD predicts that inflation in the UK will average around 3.5% this year. The figure is well above even that of the US at 2.7%, despite Donald Trump imposing the biggest tariffs since 1930s on imports, a policy generally expected to push up prices. The OECD said the UK inflation would slow to 2.7% next year, still well above the Bank of England's 2% target. The bank has basically has pointed to regulated prices such as water and energy bills, as well as the national insurance contributions rise to help explain above target inflation. Alongside its inflation warning, the OECD suggested tough tax and spending plans would put the brakes on economic growth in the UK over the next 12 months. It predicts modestly stronger GDP growth for the UK this year of 1.4%, up from 1.3% in its last forecast. However, its projection for the next year is unchanged as a relatively sluggish 1%, basically an unhelpful forecast for the Chancellor, Rachel Reeves, as Labour basically battles to kickstart growth. The body said Britain's tighter fiscal stance, higher taxes, and reduced government spending was expected to weigh on the economy. Reeves will present her budget, at which she expected to raise taxes on the 26th of November 2025 later in the autumn. If the OECD's growth forecasts prove accurate, that would put the UK's GDP growth rate for next year in the middle of the pack for the G7 nations, behind the US, Germany, and Canada, but ahead of Italy and Japan and France. This year, the UK is expected to be the second fastest growing country in the G7 behind the US. Labour's target before last year's general election was to secure the highest sustained growth in the G7, though it was though it was unclear over precisely what period. Responding to the OECD forecast, Reeves said these figures confirm that the British economy is stronger than forecast. It has been the fastest growing of any G7 economy in the first half of the year. But I know there is more to do and build an economy that works for working people and rewards working people. Conservative Party leader said the OECD report is a damning verdict on Starmer's weak economic management. Growth is shrinking, inflation highest in the G7, all driven by Labour's tax hikes. Britain needs strong leadership and a clear plan. The tricky UK forecast came in OECD's interim economic outlook, in which the Paris based Club of Industrialised Countries said the economic impact of Trump's tariffs had been slower than expected to materialise but would hit global growth in the coming months and weeks. It has upgraded its projection for global GDP this year to 3.2%, up from the 2.9% expected in its last forecast in June. Global growth was more resilient than anticipated in the first half of 2025, especially in many emerging market economies, it said in its interim economic outlook, adding that industrial production and trade were supported by front loading ahead of higher tariffs. However, with labour markets in several countries, including the US, already slowing and the impact of front loaded exports, warning the OECD expects weaker global growth of 2.9% next year, the same as its June forecast. Trump's trade policy has shifted repeatedly since he announced a wave of reciprocal tariffs on what he called Liberation Day in April, targeting particular countries, regions, and products. The OECD estimates the average tariff applied on imports to the US was 19.5% at the end of last month, the highest since 1933. As a result, and also because of slower net immigration and other Trump policy, The OECD expects US GDP growth to slow from 2.8% last year to 1.8% this year and 1.5% in 2026. The impacts of higher tariff rates are yet to be fully felt in the US economy, it said. Most leading economies have declined to retaliate against America, which could lead to a full blown trade war, instead offering concessions in the hope of winning more favorable treatment from the White House. It's also highlighted significant risk to the global economic outlook in coming months. Further increases in bilateral tariff rates, a resurgence of inflationary pressures, increased concerns about fiscal risk or substantial risks, repricing in financial markets could all lower economic growth relative to the baseline, the report said. The OECD also highlighted the danger of high and volatile crypto asset valuations given how closely these are being intertwined with global financial systems. Okay, people, there you have it. So, the OECD is warning that the UK might suffer from the highest inflation across the G7 this year. Do let us know what you think about that. Are you feeling the pinch in terms of the cost of food and living generally, cost of living crisis in the UK and elsewhere? Don't forget to like, share, subscribe. Catch you in the next one.